Hello and welcome to this basic macroeconomics revision course. I am your teacher Nadeem Sarwar. Today we shall discuss circular flow of national income and different concepts related to national income. This is our fourth lecture of first topic. The reference books for this lecture are Macroeconomics by Robert J. Gordon, Macroeconomics by Oliver Blanchard, and Macroeconomics Theories and Practices by Richard T. Freund. Let's start with the lecture. Students, in macroeconomics, we divide the whole economy in four sectors. First, households or consumers who supply factors of production, earn income, and spend their income on consuming different goods. Second, firms or producers who produce different commodities, supply them to consumers and earn income. For producing different commodities, they need factors of production which are supplied by households, and firms pay wages, interest, or other things as a reward of those factors of production. Third sector is government, who collects taxes from consumers and producers, gives subsidies, transfer payments to consumers and producers, and also engages in different kind of market activities. Fourth is the rest of world. The simplest form of the economy is two sectors economy, which consists of households and firms only. Three sectors economy also consists of government. Both two and three sectors economies are called closed economies, as they do not interact with the world in economic matters. However, four sectors economy, which includes rest of the world as well, is called an open economy. Students, the circular flow of national income is a simple way to represent how different sectors of economy interact with each other and how the national income flows between the sectors. In simplest form, we assume two sectors economy in which households supply factors of production and demand for goods and services, while firms produce goods and services and supply those and demand for factors of production. Firms pay the reward against the services of factors of production, which is expenditure on the part of firms and income on the part of households. Households pay for the commodities they buy, which is their expenditure and income for the firms. Households also deposit the part of the income left after consumption, which is called saving, into the banks, which lend them to firms, and thus savings are converted into investment. Now let's look at this through circular flow diagram. In this diagram, we represent two sectors of economy, firms and households. We assume that there are three different markets: the commodity market, the financial market, and the factors market. Students, firms produce goods and services, and households buy those goods and services through commodity market. To purchase and consume those goods and services, households have to pay their prices, which ultimately reaches to the firms, and this becomes firms' income. On the other hand, firms need factors of production to produce different commodities. Firm gets those factors of production through factor market, in which they are supplied by the households. And to continue their services in production line, firms have to pay them, which ultimately reaches to households and becomes their income. Households consume a part of their income, and remaining smaller part is saved in financial markets. Firms, when they need funds for expanding their production activities, they go into those financial markets and obtain funds, which is investment for them, and these funds were savings for households. Thus, this represents how the national income or the total output flows from consumers to firms and firms to consumers through these three markets. Students, the outer circle, which is in blue color, represents real flow, while the inner circle, which is shown in light color, represents monetary circle. Now, the three sectors economy. The third sector of the economy is government, which provides some basic services like of law and order, infrastructure, health and education facilities, and defense, etc. to people. The expenditures on providing people with these different facilities are termed as government expenditures, which are financed through taxes, borrowing, or through printing money. Governments in some countries also help the vulnerable people to make their both ends meet. This is called transfer payment. For a good functioning government hires factors of production and also buys different commodities. Also, in crisis time, government help economy to revive, works to raise producers and consumers' confidence, and thus puts economy back on the track. Therefore, the role of government is crucial in modern economies. Now, let's study three-sector economy through circular flow diagram. Now, we have three sectors: households, firms, and government, and same three markets: the commodity market, the financial market, and the factor market. For simplicity, we represent the flow of commodities and their prices from firms to households in one loop. Similarly, the flow of services of factors of production and their reward is also represented in one loop. As discussed earlier, savings are deposited into financial markets, and both households and firms can get loans for personal use and for investment from financial markets. The government collects taxes from both households and firms. It helps poor households make their both ends meet through transfer payments and helps industries through subsidies. Government also buys different commodities from commodity market and services of different factors from factor market. Now the four sectors economy. As told earlier, the rest of the world is fourth sector of an economy. The economic conditions of one country are also affected by the economic conditions in other neighboring countries. If a country prospers, its aggregate demand increases, and thus to fulfill the wants, people purchase items made in other countries as well. Fourth sector that affects our economy through exports to and imports from different countries. Now let's study this through circular flow. Now we have four sectors: households, firms, government and rest of the world, and three markets: financial market, factor market and commodity market. First, we complete circular flow of three sector economy. Now, the rest of the world buys commodities from an economy, say economy A. These are economy A's export and import for other economy. We name it the rest of the world. Similarly, the factors also move from one economy to another economy. That is, some of the workers from one economy goes and to work in other economies to earn livelihood for themselves. Similarly, the capital also flows from one economy to other economy in search of better reward. This completes our circular flow topic. Now we discuss different concepts of national income. Students, households receive only a part of GDP. The rest leaks out of the circular flow in form of tax revenues for government and savings that provide funds to capital markets. As you know, gross domestic product is the market value of all final goods and services produced in an economy during a specific period of time. Next, gross national product, which is the market value of all final commodities produced by domestic factors of production during this specific time period. Remember, this is the product of gross domestic factors of production. Simply, we say that GDP includes everything in an economy, say Pakistan. This production uses some domestic and some foreign factors of production, especially labor and capital. Similarly, some of Pakistan's labor and capital also works in foreign economies. So, if we add up the income of all Pakistani factors of production, irrespective of the matter that they are working in Pakistan or in any country, we get GNP. This is also shown by the equation. Next is net national product. Net national product is national income after adjusting the wear and tear in machinery during production process. This wear and tear in capital is called depreciation. Next, national income at factor cost. This is the part of national income that is distributed between the factors of production. National income at factor cost is net national product minus indirect taxes plus subsidies. Students, we can measure all these concepts at domestic level as well, such as net domestic income is GDP minus depreciation, and domestic income at factor cost is net domestic income minus indirect taxes plus subsidies. Next is personal income. Personal income is the income received by the households from all the sources. This is what left after adjusting undistributed profits by corporations, social security contribution, and transfer payments from national income. Therefore, personal income is, and the last is disposable personal income, which is what left after paying for personal taxes. This is what an economic agent, household may consume or save. So, disposable personal income is now we show all this calculation from an example. Let's assume that GDP of an economy at a certain time period was 15,075. The payments of factors of income to the rest of the world was 532, which is subtracted from GDP, and that economy received 782 from the rest of the world as factor income. Thus, this is added to GDP and we get gross national product of 15,325. During the considered time period, the wear and tear in capital goods recorded worth rupees 1930. Thus, net national product become 13395. Indirect taxes paid to the governments were noted 1002.2 and subsidies received were worth 497.2. Thus, national income at factor cost was 12890. The undistributed profits were recorded at 475. Social security contribution were recorded at 1025. Both were subtracted and transfer payments received worth 500 were added to get personal income worth 11890. Personal taxes paid worth rupees 1000. Thus, disposable personal income stood at 10890. That is all for this lecture. From next lecture, we shall discuss classical theory of income and employment. Please post your questions and give your feedback in comments. Also consider liking and sharing the video and subscribing the channel.